Welcome to the Invest for More Real Estate Podcast. My name is Mark Ferguson, and I am your host. I'm a house flipper. I flip 10 to 15 houses a year. I own 13 rental properties with a goal to buy 100 by 2023. I'm also a real estate agent. I've been licensed since '01. I run a team of 9. We sell close to 200 houses a year. So on this show, we like to interview house flippers, landlords, and the best real estate agents in the business. So stay tuned for some great shows. If you want more information on my rentals, on the numbers, how I buy properties, check out investformore.com. Hey everyone, it's Mark Ferguson with Invest for More, and welcome to another episode of the Invest for More Real Estate Podcast. I have a great guest on for today's show, Devin Elder, who is a very, very busy real estate investor. He's focused on single family for much of his career, doing 50 deals a year as a wholesaler, flipper. And he also has ventured into the multifamily business, doing some rather large deals. So I'm really excited to talk to Devin, hear how he got into real estate, hear how he's become so successful, and what his plans are for the future. So Devin, thank you so much for joining us. How are you?
Doing well, Mark. Thanks for having me. Appreciate it.
Yeah, no, love to have you on the show and love to hear your story. I always start with everybody, what first drew you into real estate? How did you get started?
Well, for me, it was really, real estate just happens to be the vehicle. I had gotten this idea that I wanted to be financially independent at a young age. And, I had spent, in my 20s, I spent a few years building some affiliate websites and things like that to try and generate some passive income. And this was, I had read Rich Dad, Poor Dad, like I'm sure a lot of the listeners, and 4-Hour Work Week had a big impact on me when that came out. So I was already kind of made up in my mind that I was going to create some passive income and find a way to build wealth. I thought it was going to be through websites. I did that for a few years, and I wasn't able to generate the kind of income that I wanted. So after that kind of, I would call it a failure of trying to find passive income through that, I found real estate, and the light bulb went off, and I said, this is it. And it's not because I loved real estate. I just saw that it could be a path for me to create wealth and passive income. So, it made sense as a vehicle, and I had already made up my mind and tried and failed on the website stuff. And so I put all my energy into real estate at that point.
Cool. I know the website stuff can be very difficult and confusing, knowing even I've been involved with it for a number of years, and it still is baffling sometimes why some stuff happens and other doesn't. But when you got into real estate, did you go full time, like wholesaling? How'd you jump into it?
Yeah, I took a strategy where I started with single family rentals. And so that strategy is still near and dear to my heart. I think it's maybe a less sexy approach than like wholesaling a deal and making a quick 20 grand. I kind of came into wholesaling later, but I started out buying a little rental, bought it from a wholesaler. It was needed to, actually, gosh, it seemed like a lot of work at the time. I think the rehab budget was like 10 grand, which is like nothing now, but at the time it seemed like a big rehab budget. But went in, hard money, bought it, renovated it, refinanced out into 30-year, fixed debt, put a tenant in it and started cash flowing and had a decent little equity capture. And once I'd gone through that and seen that was a viable model, I just started buying those like crazy and just kind of rinsing and repeating, where I didn't really have a lot of capital tied up in them because I would refinance out, and sometimes I would refinance out all my money. Sometimes I would refinance out most of it and leave 5 or 10K in the deal. But that was a foundation for me to start creating some cash flow and some equity. And that's kind of what kicked everything off.
Very cool. And you're in Texas. Were you doing all this in Texas?
Yeah, in fact, I'm in San Antonio, and, hundreds of units later, they've all been in San Antonio. One of my mentors early on told me not to buy anything more than 30-minute drive from my house. And I mapped that, and I looked at it, and that was the whole city. So I was like, okay, I can buy anything in the city if the numbers work. And that's what, that's the only stuff I've ever bought is kind of all in my backyard.
Oh, very cool. Yeah, no, I've done the same thing with my rentals. I love single family rentals too. I think they're just a phenomenal investment. And I
Yep.
know there's so many people that kind of put them down, but they've been great for me. And I've done the same thing. All of them except for one turnkey I bought in Cleveland, which is kind of an experiment for my blog almost, are
Sure.
within 7 miles of where I live. So they're
That's
all right
incredible.
there. And when we're doing our flips, they're all 30 miles away pretty much. So it's kind of been the same philosophy. Um, when you're buying all these single family rentals, were there certain things you're looking for, locations, cash flow, ages, or was it just whatever the numbers worked on?
It's really whatever the numbers worked on. I mean, ideally, it's built after 1980. It's a 322, but the market's picked up here in San Antonio, and I'm sure other places too. So it's not like you just get to go pick it off a tree. But if I would have had my way with those rentals, it'd be that criteria. But I didn't care. It could be anywhere in the city as long as the numbers worked. I would not get emotional about what it looked like or where it was. If the values were there, the rents and the after repair values were there, and it could hit my criteria, then that'd be good. And so when I was doing the rentals, kind of getting started, I just looked for, I would like to pick up at least 20,000 in equity and have at least, I think my criteria was like 350 in cash flow a month. And the biggest thing for me was low cash out of pocket. So if it was under 10,000 cash out of pocket, I would try to buy it. I didn't have a lot of capital starting out, so that was real important to keep those numbers in check.
No, those are great numbers if you're taking your cash out and still getting that cash flow, especially because I know Texas has a little higher property taxes, so you've probably got to account for that as well when you're buying.
Yeah, exactly. That's right.
Cool. So with the single family rentals, I'm guessing that really built a solid foundation below you, knowing you had that money coming in and that passive income. How did you expand from those into the other, areas of real estate?
Well, the passive income really, you're right, 100% right. That was the foundation, or what I would call like my base salary. I had a pretty good corporate job during this time, and my goal was to replace that corporate job income with passive income. So I was able to do that after a period of years doing, really, you talk about side hustle. I don't know if that was a term when I was doing it, but man, was I side hustling. I would meet the title company would send somebody out to meet me at Starbucks across the street from my work, and we'd knock out a closing, and I'd look at properties in the morning and after work and on the weekends. So I was building all that, and I eventually got to the point where I had enough cash flow that it paid for it. Basically, the cash flow was exceeding my corporate income. And around that time, I also started getting to flipping houses. So I started out with this really conservative rental approach where I wasn't seeing these giant chunks of capital come in, but I was seeing that cash flow build up, which was my goal. But then after I'd done 10 or 12 of these rentals, I started flipping, and that's when I started to see $20,000, $30,000, $40,000 chunks of capital coming in. So when I had the base of income off my rentals, and then I started seeing that I could make this money flipping, then it started to make my job look almost more like it was costing me money, because having to go to work and spend all day in a cubicle, even though it was a good paying job, it was actually costing me money because the opportunity cost of not being able to go flip a house for $20,000, $30,000 or whatever. So at that point, it was a long-term plan. It took me a couple of years, but I was able to just pull the cord on the job and then just go full time into managing my rentals and flipping.
No, that makes perfect sense. I've talked to a lot of people in some of my coaching programs or just on the website who are kind of in that same position you're in, where they have a corporate job and they make really good money. So it's kind of like sucking them into it. They don't want to leave it because they're making this money, but then they have rentals, they're flipping. And, I kind of tell them, imagine how much you could do with real estate if you had a full-time, career in it and you didn't have to worry about that job. You would do so much better. And plus, with a lot of the rentals and things, the taxes are so much better as well in real estate. And with the new tax laws, they'll be even better for a lot of people. So it's tough to cut that tie, but man, is it beneficial if you can do it.
Yeah, that's right. I always kind of say I'm glad I didn't get one more promotion, because I think I was kind of at that threshold for me financially where, I was making good money, but I wasn't making like crazy corporate money. And that's different for everybody. But for me and my level at the time, it was just enough to be good money, but not enough to be like, you get too comfortable. And most people I have a lot of friends in the corporate world that are like, man, I want to be doing what you're doing. And it's like, well, you gotta jump. And most people are not going to jump, but you gotta do it at some point. And I'm very thankful that I never had a better job. In fact, my last couple of years in the corporate world, my boss would ask me, okay, what's your what's your career path and what's your next your next move? And I would just kind of like sheepishly be like, oh, I kind of like where I'm at while I'm doing, secretly building this real estate empire and, eschewing any kind of opportunity for promotion. It made me kind of an odd duck in the corporate world. Like this guy doesn't want to get ahead or move up. Huh? He's just content to just kind of chug along. And in the background, I'm working like a madman building this real estate empire. So, yeah. It's a good point. You got to jump at some point.
Yep. No, it makes perfect sense. I had another guest who kind of actually got fired from the corporate world because they're doing so much real estate stuff. They didn't care about their job anymore. And, it's like, wow, that was so nice. I got fired. That was great. But
yeah, that was probably a big service for that person because it's scary pulling the plug. And I mean, it is scary. So if somebody does it for you, that probably works out better.
Yep. Cool. So how did you start getting into the flipping? Was it just, you saw the opportunity there or you wanted to, increase the capital for buying rentals?
Well, it was both. Yeah. I mean, I think I'm very, I guess very conservative in the way I kind of approach things. I want to take things in chunks and try things in chunks and absorb new information. So I didn't want to go out and start flipping houses and get burned. So I did a bunch of rentals first because I frankly think it's a lot easier to refinance a renovated house than it is to actually sell it, right? There's just way fewer steps and it's easier in my mind. But once I'd done a bunch of those, I started looking at the numbers and saying, look, there's margin here. I'm going through this whole process. We might as well just start listing some of these and just selling them instead of refinancing. So it was kind of a natural progression. And then that was, I built a revenue kind of model of how much money I wanted to make and how many deals I needed to do. And, flipping was a big part of that component. So it just was kind of a natural progression into that.
Cool. And when you're doing the flipping, because I've been flipping for a number of years, and I think we did 26 this year. And one of my biggest problems has always been finding the contractors, keeping them working hard. Is that the same for you?
That was absolutely the hardest part, and I fixed that this year. I mean, you and I are talking at the very tail end of 2017, and I fixed that this year as a result of kind of two things happened. So earlier this year, I bought a 75-unit apartment complex, really, really heavy value-add turnaround project, and it was taking a lot of my time, rightfully so. And the flipping business was still going and still rocking and rolling, and I was just spread too thin. So out of necessity, I brought on a partner who he's a young guy, construction background. His father's a GC who's done some fantastic work for us. So back to your point of, the difficulty of finding crews, I said, you know what, this flip business is great, but it's holding me back from buying more apartments, which is where my future is. So I'm just going to partner with this guy. We're going to continue to buy all these houses. I'm going to give up some profit, obviously, but I'm going to let him manage the construction aspect of it. So he's just done a phenomenal job. I basically took the biggest pain of the flipping business and then gave it to somebody else who's good at it. And not to say he doesn't have challenges with it. I mean, we're constantly hiring and firing subs and trying to keep them busy and move it around. But my partner's really managing a lot of that, which has just been fantastic. So we're able to do a lot more volume because we've got some division of labor, and he's able to run the construction aspect of it. And frankly, he's got a couple guys on the acquisition side too. So that business has really kind of taken off because I've added more people. And while, of course, I'm sharing in the profits now, the pie's gotten a lot bigger too. And most importantly, I'm able to step out of it and go focus more on multifamily. So that was kind of my fix. I mean, you always need money, a deal, and a team. And you're right, the team is the tough part a lot of the time, especially with the contractors. So yeah, we feel that pain too. And the way I fixed that was just to bring on a partner that was a construction guy and let him run that. So that's been going extremely well. I've been very happy with that decision.
Very nice. Yeah, on the same thing with my business, I didn't partner with someone, but I hired a project manager. There's actually someone who'd worked with me for a number of years doing other real estate stuff. And once I found the right person for that job, things went so much smoother and so much easier. And then we also hired some employees this year too, who are full-time, handymen, contractors who only work for me, which is really amazing because I don't have to worry about where they're at, their bids if they're working hard. So that's been a huge breakthrough for us too.
That's outstanding. I've toyed with that model for a long time. Do I hire more people? Do I bring people on full time? Because right now we don't have anybody on salary except one kind of office manager that handles a lot of the scheduling and a lot of the paperwork and stuff like that. So we've got one person on salary right now, but everybody else is contract labor. So that's great to hear that you're able to do that. I think there's different models. For me, it was again out of necessity. I was so busy with the apartment complex, and I really didn't want to manage employees. Part of this whole thing for me is I don't want to build a giant organization where I've got HR and a bunch of that stuff. So I just said, you know what, I'm going to partner with this guy. He's done great work. We partnered on a few deals before, and I don't want to manage him. He's an equity partner, and he wants to get this stuff done as much as I do, and we're going to each work on our piece of the business and just move on. And so, my key criteria in doing that is that I need to be able to step out of the business more so I can go do more multifamily. So, I think it's awesome to be able to get to a point where you can plug some people in, and that's great to hear that some full-time people are working out. Because that's the tricky part, I think, is finding the right crews and the right contractors.
Yeah, no, it definitely is a tricky part. And yeah, we still struggle with it too. You think you get it figured out, and then something always happens. But
Yep.
When you're doing these flips, how are you financing them? Are you using local banks, hard money, your own money? How does that work?
Well, I started out using hard money, and then moved into private money, which was, a revelation for me, just to be able to work with an individual and pay them 10 or 12%. And that's what we do now. So I've got a really pretty big database of lenders that want to fund these projects. And, it's pretty straightforward. It's a first lien loan docs we set up, and they fund the purchase price and the rehab up to 75% of LTV. I won't go higher than that. And then we just, pay them monthly interest payments and crank out the project. And when we sell or refinance, we give them their money back. And then we just kind of rinse and repeat. And another thing that's done for me, kind of looking at a high level overview of my business, because now I'm shifted to these multifamily projects where, I was kind of proud of myself that I built through one-on-one relationships and referrals, built a big network of lenders who would lend on these flip projects. So I've got a lot of folks that are lending on that, and it's great because we don't ever have to say no to a deal. If a deal makes sense, we will buy it. So that's great to just kind of have an unlimited source of capital for that. So I kind of patted myself on the back for building that database, but then you go to the multifamily world and you're like, okay, this one deal is a $4 million capital raise. You're going, well, it's time to grow that lender or investor network, because $4 million will get you a lot of houses to flip, but that could be one multifamily project. So what I've done with my lender database is just kind of continue to build those relationships with folks where, okay, you lent on a project last year and it was $100,000, and we returned your capital and you made 12%. You're happy. Maybe we did two last year. Well, now I've got this multifamily project, and we're projecting 10% cash on cash returns, and we want to double your money in 5 years. And that same lender will say, okay, well, we worked with you on the house stuff, and so now we'll work with you on the apartment stuff too. And so that's been nice to kind of make that transition in terms of capital is to take those lending partners that I've built relationships with over the years and say, well, look, there's these bigger opportunities for a little longer term hold that are gonna produce cash flow, but they're also gonna have an equity component for you, unlike the house flipping stuff, which is just straight debt. So it's been interesting making that transition and trying to grow that database to be able to pull off those $2, $3, $4 million capital raises that are, on the apartment side.
Right. No, that makes perfect sense. And I've done the same thing. I still use some local banks because I can get really cheap money from them, but I use a lot of private money. I've actually used hard money for the first time lately because rates have dropped down so much.
Really? Wow.
Yeah. I mean, I've gotten a couple deals under 9% with hard money lately. And they still have some of the fees and stuff they get in there that you don't have with private money. But so that's been interesting. And then, the private money lenders, of course, are just so easy to work with. It's like you send a text and say, hey, you want to do this deal? It's like, yes. Okay, great. So
yeah, there's something to be said for that. And, it's all about relationship. If you got a good relationship with somebody, you like working with them, you like making money for them, it's just, it can't be beat.
Yep. No, exactly. And it's funny you say that too, because I have one private money lender who's partnering with me on a multi-million commercial property that we're working on buying here. So kind of the same thing where they transitioned into the flips into something else. And it's all about relationships. So.
Yeah, that's right. And I mean, we always, as investors, we always think of these different classes of, flipping or commercial and a lot of times an investor, they may not that they don't care, but, they're looking at the return and the fact that their investment is collateralized and obviously they're looking at the operator, not necessarily what kind of asset class it is. So it's just,
exactly.
Creating a great return that's collateralized with somebody that you like and trust. I mean, that's great. That's my goal, is to be that guy in a few years where, I've got some stuff, but I'm letting the young guy that's hungry and is building his empire go out there and do it with my money. So I think I've got a few years of kind of continuing to build my empire, and then I'm going to start to transition to be the money guy, and so it's kind of a natural progression.
It's funny. I talked to my main private money guy, and he's always like, I should be doing more, because he used to do the same thing. He'd be the active flipper buying rentals all the time. He's like, I just wish I was doing more deals and doing more stuff myself. But then he's like, at the same time, I'm like, I'm not really doing any work at all and making money, so I'm okay with that.
Yeah, exactly. You get used to that real quick, I'm sure. Yeah. That's great.
Cool. Well, I definitely want to talk about the multifamily, but one last question on the flips before we get into that. How are you sourcing your deals? Is it direct marketing? What's that part of the business look like?
Yeah, great question. That's, that's a challenge too, I think, in this market. So when I started investing in 2012. It was, in hindsight, it was like it was a bonanza. There was deals everywhere. I didn't know that at the time because I was just starting. And deals have definitely gotten tighter. So when I was kind of the solo operator for a number of years, I got most of my deals from one wholesaler, a guy that I could trust. I mean, wholesalers have a bad name a lot of times, and for good reason. There's a couple of companies here in my market where they just basically prey on the new investor that's went to a seminar and is fired up, and they're going to burn them on one deal and never have that relationship again. And they can just cycle through people like that. It's pretty brutal. Anyway, I built a relationship with one wholesaler that I liked a lot. He would get me deals very consistently that made sense for me, and I just made it my goal to be his best, easiest buyer. And we did a ton of deals like that. And so that went on for years. And then I started working with my partner this year, and there's two acquisition guys that we have, and they're doing all kind of stuff. I mean, they're doing driving for dollars, and we've got some, kind of some software avenues and things like that where we can find people. And so they're doing a lot of cold calling. We are doing some mail. I wouldn't say that's my favorite avenue because it obviously delivered some deals for us, but it doesn't feel like the biggest winner for me. I think it's just kind of like these one-off deals that we're finding. The guys are driving for dollars and finding those and able to track people down. And a lot of times these would be deals that wouldn't necessarily hit the criteria if you were to pull a list to mail. They might not be on there for whatever reason. So I would say that's probably one of the better avenues. We still buy from wholesalers. We still wholesale. We, I have a marketing website up, and we put signs up in every house that we do. So, I mean, we've probably got 8 rehab projects going right now. So that's 8 signs out there around the city with our with our website and our phone number on there. So there's kind of a lot of hooks in the water. I would say there's not one avenue, unfortunately, that is like a slam dunk, deal producer, because the stuff that the wholesalers are pushing out now in general is just total garbage at this point. There's no way to make money on it. So we're sourcing a lot of our own deals through, cold calling, driving for dollars, that kind of thing.
Cool. No, that makes perfect sense. And yeah, I agree about the wholesalers. I think you go through about 9 of them before you find a decent one. And
Absolutely.
you get these newbies who say, "Oh, the cost is $200,000. There's $20,000 of work, and it's worth $260. I'm going to make $40,000." It's like, well, you got another $20,000 in costs. Your repairs are probably $40,000, and it's maybe worth $250. So you got to verify everything.
Oh yeah, I mean, I ended up building an Excel model that I use for the flips, where there's a 3 to 5% price reduction baked in. There's 1 to 2% concessions. There's 1 to 2% repair amendment. There's a 10 to 20% contingency on the rehab budget, and there's 60 to 90 days on market. So if all those things in there, if it still nets me at least 10% of the sales price, then I'll buy it. But it's got to have all that stuff in there. And so you plug one of these wholesale deals in there and your profit's at like $900, right? There's no way, man. There's no way it's worth it.
Exactly. No, great information. And yeah, as far as sourcing deals, we're kind of doing the same thing, driving for dollars. We do a lot of direct marketing, which has been great. I still get a lot of deals from the MLS. I'm an agent, and that's been my bread and butter. But then, yeah,
that's great.
Wholesalers, Craigslist. I bought a house off Facebook the other day. That was cool. So
cool. Yeah.
Yeah.
Very cool.
All right. So you've done the rentals, the flips, and now you're getting into the multifamily. What drew you into that side of the business?
Well, I'd always wanted to end up there, for the reason of really for scalability, because my goal for years and years has been to own 1,000 units of multifamily, and that was just a number to shoot for in my mind. So the reason is because if I look at a flip business that's doing X amount of revenue per year, and if I were to try to grow that 10 times, I just, it hurts my brain. I'd have to be in multiple markets. I'd have to hire all this staff, and there's just so much minutia and everything involved that it doesn't scale. So my goal with the multifamily is just to be able to have a business that scales, and with a larger property and third-party management, you can definitely scale a multifamily business up. So that's been my goal for years and years. I think initially it was capital, confidence, and experience were kind of not there. So it's been a very organic process for me to grow into that. So it's been, years of studying multifamily and hanging around with other multifamily owners, building up my war chest through flipping. I started out with a small multifamily that I bought on my own without any partners. I really wanted to kind of prove that I could make money in multifamily without raising capital. So I started there, and then from that small project, ended up selling that and jumping into a 75 unit. And then from there jumped into 192 units. So it's scaled quickly, but the beauty of the multifamily side is that you've got teams in place for all this stuff to handle property management and things like that, and you have more budget to work with, and it's obviously a very different animal than the single family side. And one of the things I like is the ability to have an impact on that net operating income. It's not necessarily all about comps anymore, although that's a factor. It's really about what can you get that net operating income to by improving the community. So I like it because it just scales better, and it's just playing a bigger game. It's a lot of fun.
I've talked to a lot of multifamily investors. I've even talked to some hedge funds at conferences and different things, and a lot of them are saying it's really hard to buy multifamily right now because prices are high and there's a lot of competition. Are you finding that as well, or are you looking for the off-market deals that aren't exactly advertised out there?
100%. I mean, in my mind, in my experience these last couple of years, it's the same thing happening in single family. People will always lament a lack of deals, and it's true. But, we're just working really hard on the single family side, and we're finding tons of deals. The multifamily side is the same. I mean, there's nothing marketed that makes a lot of sense. There's a lot of money chasing yield. So that's totally true. So I think it's definitely about off market, your ability to source off market deals, and your ability to find mismanaged deals. So it gets a little tricky. I'm looking for 100 unit plus stuff. And, if you start to get over 200 units, you're kind of playing more where there's institutional players, and you may not see stuff that's mismanaged or has a value add opportunity. But there definitely is stuff with people maybe that are self-managing or out-of-state owners where they've just mismanaged it. Maybe they didn't budget enough for repairs or for CapEx, or they just are out of state and it's out of sight, out of mind. So that's kind of the opportunity that I see, and it's a lot of off-market stuff. So it's contacting owners, it's building a network of brokers, and it's kind of really working that off-market side on the multifamily. Really kind of almost the same as the single-family stuff. It's definitely tight, definitely hard to find deals, but I don't think that means that you got to just sit on your hands. I mean, it just means you're going to have to do more work for it. That's all.
Right. No, that makes sense. And yeah, same thing with single family. A lot of people say you can't get deals now, that the investing side is over, but it is for people who don't want to work hard and just want to, find those foreclosures they can make money on with paint and carpet. But yeah, there'll always be deals there if you know how to find them.
Yeah, I totally agree. And I think it's good that it's hard. And I think it's good that maybe people want to go put money in Bitcoin, because it takes those people that aren't really committed, and it kind of puts their attention elsewhere. So I'm kind of glad that it's almost as hard as it is, because the only people out there competing are the other die-hard, serious hard workers. And that's what I am. I am a 100% committed to this, and I'm not kind of a casually interested. I think a lot of people are kind of casually interested and want somebody to put a deal in their lap. I think it just doesn't work right now. But if you're 100% committed to it, you'll absolutely find a deal.
Yep. Nope. I completely agree with you. With the multifamily, are you doing like a syndication deal with your investors, or are they partners? How's that work out?
Yeah, for sure. It is a syndication model. And so, if I was at a point to put $3 million cash in my own deal and just get a bank loan on it, I may go that route. But the syndication model is good for a couple of reasons. One is you can put together larger amounts of capital. But two, one of the things I've found over doing this business for a lot of years, one of the things I found I really enjoy is kind of the finance piece of it. I kind of view my company these days as a finance company that happens to be in real estate, because it's really all about finding something that I can model good returns for investors. And that's it. That it starts and ends there. If I can model good returns for investors, then I can make it work. But one of the other things too that I find really kind of fulfilling and rewarding is being able to kind of take people along this journey too and give them great returns, because I found there's just this great it's almost kind of sad, but everybody hates their job, and there's kind of this angst of so many people, smart, talented people, that go to work every day in a job they hate. And it's pretty cool to be able to give those people kind of an insight into the real estate world, and not only an insight, but profit out of it in a passive form where they can participate without having to know and do all this stuff that I go out and do. So I enjoy very much bringing on partners for the fact that I can do bigger deals, and the fact that I can, have them participate in the returns. So a typical deal would be, so I looked at a 100-unit property yesterday. It's looking like at first pass, the capital raise will probably be $1.8 million. So I'll put in 100 or 200K of my own money. I'll participate right alongside the rest of the investors, and then I'll go out and find, if it's 1.7 or 1.6 capital raise, I'll go out and find 15 investors at 100K each or something like that. And that'll just be out of my network of folks that I've been working with for a number of years. And we'll go out and raise that capital and then go put bank debt on the rest. So if it's stabilized and we can put non-recourse debt on it, that's great. If it's not stabilized, maybe we'll get something from a local lender that's has an appetite for those kind of projects, and then we can either refinance once it's stabilized or sell, or whatever the case may be. So it's bank debt for 75% of it, and then it's it's a syndication for the rest of it, and then of course your CapEx budget and whatever other capital you need to raise.
Awesome. No, sounds really similar to a lot of other deals I've heard with the really value add multifamily. It's actually similar to some of the bigger commercial deals I'm trying to do now. And
Sure.
it's just a really cool business to be in with real estate, all the different things you can do. Well, I think those were all the questions I had for you. Now I know if people want to contact you, get in touch with you, what's the best way for them to do that?
Probably the easiest single point is my company website, and that's djetexas.com. So that would be Dylan Jacob Emily Texas.com. And that's got, contact for me. It's got links to social media stuff, links to, all our projects and see pictures and before and afters and all that good stuff. So that's kind of the catch-all.
Very cool. Very cool. And what's your goal with that website, if you don't mind me asking? Are you looking for, more investors or what's the purpose?
Yeah, that's really it. I mean, to grow my relationships with investors, because as I've grown, these projects, these multifamily projects now just require bigger capital raises. So always looking to meet new investors. And then, so it's kind of a showcase of what we've done and our portfolio to grow new investors, and then just also have information. There's kind of an education component too. I've got a YouTube channel where I talk about multifamily. It's basically like a multifamily syndication education platform. So if somebody's new to it, they can go and kind of consume some of that content and get up to speed on how the whole thing works.
Cool. Very cool. Well, like I said, that's about all I had for you. But I do have one last question I was trying to ask. If someone's looking to get into real estate, what's some advice for them? I know you're doing a lot of different things. I do a lot of different things. I always like to tell people to focus. Don't, try and do too much at once. But what's something else you can add for people looking to get into the business?
Yeah, Mark, I really like your focus point, and I agree. I'm gonna divide this into an A and B answer. So the A answer would be for somebody that has money, right? They've done their career, they've got capital, they're looking to invest. For that person, I would say go invest in somebody's syndication. Find a good operator that you like and trust, put money in their deal, and look over the shoulder, ride shotgun. You're going to see the financials, you're going to be a partner in the deal, you're going to be an equity owner, you're going to get to see all that stuff. You can go walk the property if you want, but you don't actually have to do any of it. And I think that's a wonderful introduction to multifamily investing. If you're younger, or maybe you're not in a good capital position and you're really just kind of starting from nothing, which I can relate because that's how I started. If you're in that category, I would recommend you partner with somebody that has successfully done what you want to do. And that might just be running errands for them or bird dogging deals. Find some way to add value, but don't go it alone. Yeah, I see people creating partnerships where two people are new. It's ridiculous. It's like, just because you have your buddy, now you're just going to both lose money together. If a partnership, you need to partner with somebody that's actually experienced. So if you're getting started, I would recommend that, because that insight from somebody that's experienced you cannot put a dollar amount on it. It's priceless.
No, great advice. And the partner thing hits right at home. So I hear people all the time like, oh, I'm partnering with my buddy. I'm like, why are you partnering with him? Like, well, I don't really know what I'm doing, so I want someone else to help me out. I'm like, well, do they know what they're doing? No. Well,
yeah, I see it too. And it's like, so you can cling to each other while the ship sinks. I mean, that's not a good strategy. And I definitely don't endorse that at all.
Yep. No, I know partnerships can be very tricky, and there needs to be one person who can add value and another person who can add value in a different way, or it doesn't work.
That's right. That's it. Yep.
Awesome. Well, Devin, I think that's all I've got for the show. Thank you so much for being on. A lot of great information. Loved hearing about your story and how you've become successful in this business. Hopefully we can stay in touch, and I wish you great success on your flipping, the rentals, your multifamily, everything else.
Excellent, Mark. Thanks so much for having me on. I really appreciate it.
Oh, no problem. And thank you again.
All right. Take care.